Now, what I'd like to do now is to, it's very important. We've heard, obviously, from the government and policy perspective, now very keen to hear the regulatory point of view as well. So, ladies and gentlemen, it gives me great pleasure to welcome to the stage the Head of Digital and Technology at the Financial Conduct Authority. Please give a large round of applause to Ravi Bala. Ravi, wonderful to see you. Come on up, and the podium is yours.
Thank you very much. Thank you, everyone, and thank you for inviting me to this conference. It looks like a great turnout here today. My name is Ravi Bala, for those of you who don't know me, and as introduced, I am from the Financial Conduct Authority, here to provide an update on our activities in terms of our innovation activities and how they might be relevant for some of you here today. So I'll give you a bit of an overview in terms of who we are, why we exist, and how we operate. So in terms of our department and why it actually exists, well, there's a number of reasons, really. The first is, as part of the regulator, for us, it's really important to understand what are the risks and opportunities which are posed by emerging business models. Secondly, how we can encourage and stimulate, foster desirable innovation safely within the market. And thirdly, to support the FCA in its digital and data-led transformation. And also, finally, how we influence across the globe in terms of regulatory innovation. How do we join up with other regulators on some of the risks and opportunities which are posed by new business models? So really what I'm here to do today is really provide you that an overview and go slightly deeper into this. But everything that we do in terms of innovation links directly back to our FCA strategic objectives. One of our key statutory objectives is to encourage competition in the interests of consumers. And we believe that innovation has a positive, effective force in driving competition in the interests of consumers. But it also helps link back to some of our other statutory objectives as well, because we believe that where there is positive innovation in the market, we'll see much healthier dynamic within the markets themselves. We'll see that markets do function and work better in those instances. And through the emergence of new business models and a variety of business models, we believe that that has a direct positive impact on customers in terms of more choice, potentially at lower cost to them. So that's in essence why we operate and how we operate in the way that we do. And as a regulator, we've been very intentional around that. How can we really understand what's going on in the market if we're not part of that ecosystem? And that was a decision, conscious decision taken by us back in 2014, where we wanted to be part of that. We did a call for input, a way to engage with the industry in terms of how should we actually go about operating in this space. And through that, we stood up our first service offering, which is called Direct Support. And this really enabled us to start to interact with firms. Specifically, in terms of direct support, it's around providing swift, regulatory, tailored feedback to firms who have got key questions, particularly, as an innovative firm with a new business model. How does this fit within the regulatory regime? What are the grey areas, or I should probably say the perceived grey areas in terms of the regulation and what I need to navigate? And also, how do I understand better the authorizations process and what I need to do to go through that? So we started that in 2014. And if I fast forward slightly a couple of years after that, in 2016, and through engaging already then with the market and being part of that ecosystem, we recognised that actually there was a real need for firms who wanted to test their business models live in the market with real consumers. And it was through recognizing that there was that need, through dialoguing with firms, that we stood up the world's first regulatory sandbox, giving us that ability to do that, to provide that environment for firms to come along to test live with customers, but on a controlled basis where we could provide some key parameters around that. If I fast forward now into, if I say into last year, 2021, we had run over 7 cohorts and enabled 150 firms to test through those cohorts, through our regulatory sandbox. And it was the world's first, so it's definitely kind of been put up on the pedestal in terms of a blueprint for other regulators to leverage as well. And I believe there's probably around about 70 of these sandboxes now in existence across the globe. At the same time, we also stood up an advice unit as well. So this was really as a result of the Financial Advice Markets Review back in 2015, which recognised, the paper recognised that there was an advice gap in the market, specifically for consumers who were underserved and needed more services to kind of help them with investment needs of investment advice, but at low cost rates. So hence we stood up the advice unit. Again, if I now fast forward what we've done, and actually it's quite timely me mentioning this to you all today, because today we've actually relaunched our web pages. So an up-to-date website for the FCA Innovation Hub, which houses direct support and advice unit, as well as the regulatory sandbox. But what we've also done is we've taken the direct support and advice unit offerings and we've created a different compelling proposition, which is known as innovation pathways, because we believe that actually there are a number of different routes by which firms want to engage with us, and actually we provide quite a pivotal role in trying to signpost, link firms up with different parts of the FCA. So hence why we've undergone that rebrand of bringing direct support and advice unit into that innovation pathways rebrand. And to date, with Innovation Pathways, we have supported, we've received over 1,500 applications to date and supported over 800 firms in total. We also have a slightly different offering, which is for firms who are at a much earlier stage in their life cycle, where they're not quite at the stage where they want to test with live customers, but actually want to have access to some synthetic data assets for them to be able to test with their business model. So we launched something in partnership with the City of London Corporation called the Digital Sandbox, which does that very thing in terms of providing synthetic data assets. And that's been really successful for us. We've run a number of pilots now. Our first pilot that we released had 28 firms, and 12 of those startups are now fully in existence in an authorized state and operating in the UK market. So essentially we've got a set of services that we provide to the market for different needs. So if you want to test but not ready to test with live consumers, we have the Digital Sandbox. If you are in that position where you do want to test and have a genuine need to test and have got a genuine new novel idea, then the Regulatory Sandbox could be for you. If it's a case of, actually, I just want to find out more about my business model, how it fits in, then you have Innovation Pathways. And again, if there's any models which involve the advice and investments side of things, robo-advice, then again, Innovation Pathways could be for you. But one last thing that I'll touch upon is the global impact through the work that we've done. So through establishing the Regulatory Sandbox, lots of regulators have been quite interested in the work that we've done here in the UK, have been very pro-innovation. And in order to manage that, we've established a number of bilateral agreements with regulators, both domestically and internationally, I should say. But we also felt that a more efficient and effective way to conduct dialogue would be through establishing a multilateral engagement platform. So back in 2019, we established the Global Financial Innovation Network with 12 other founding members of GFIN. And this was really all to discuss and encourage and stimulate the debate around regulatory innovation globally and how we could operate going forward. So if I fast forward to today, in 2022, we have over 75 regulators who are part of this Global Financial Innovation Network. And we do a number of things with that. We actually run what's called a global sandbox for firms who want to test across multiple jurisdictions simultaneously. But we have a RegTech and SupTech work stream as part of that, and also a collaboration work stream where we're looking to share more insights with the wider market, both UK and globally in the future. I'll come into land now and I'll stop there just in case there are any time for any key questions.
Thank you very much indeed. So there is just sort of one question which I'd love to ask you, Phil, which is if there were one piece of advice, one moment to call out to this audience, there were maybe one or two things they could do that would help you figure out the pathway for the industry, what might they be?
Yeah, I would just encourage people to think about having direct, open, honest conversations with the regulator and for us to collaborate. That's what we're really about. So, we've been quite intentional about that, especially more recently, of having, roundtables to encourage that understanding both ways, I think. So I think if there are any cases of people are thinking we've got some ideas around business models, a new product service line, then absolutely do reach out to us. Our website is up to date, so you can have a look in terms of what service may be more applicable. Or even just kind of an informal conversation could really help us get closer, particularly to this sector in terms of asset management and vice versa.
Wonderful. Great. Ladies and gentlemen, please join me in a round of applause for Ravi Bala from the FCA. Thank you very much indeed. Thank you for your time. Thanks for being with us. Really appreciate it. Thank you. Wonderful. So now we're going to move the conversation on a little bit further, where we talk now about the all-important discussion concerning leadership. And I'm delighted to welcome to the stage two phenomenal entrepreneurs, industry experts in the field of culture and leadership, but both of whom have actually established their own businesses and also been part of this industry for many years. As they come to the stage, I'm going to mention who on earth they are and ask you to join me in welcoming them. The first is Julie Chakravarti, who's the CEO of Runway. It's a workplace advice platform, and she was also alumni of Cohort 3 of the Engine Innovator Program. Ladies and gentlemen, please welcome Julie Chakravarti. And also joining Julie as she comes up to the stage, just around the side this way, be perfect. And actually, if we could ask you to sit in the order. So Julian, if you could sit the furthest away, that'd be wonderful. Our second guest today is Vicky Sanders. Now, she was the co-founder of a brilliant business called Research Exchange, and today is the Chief Commercial Officer of LiquidNet. Ladies and gentlemen, please welcome Vicky Sanders. And Gillian is going to be joining us to chair this discussion all about culture, diversity and leadership. So Gillian, it is over to you.
Oof, lost my shoe. Comedy. There we go. Right. Welcome, Julie and Vicky. Thank you so much for joining us today. And I'm absolutely delighted to have two such successful female fintech entrepreneurs with me on stage. As Julia mentioned, Julie, you are a very successful CEO of Runway, which is a workplace advice platform, and also a very successful alumni of the Engine Innovator Program. And Vicky, your experience within the fintech space has given you first-hand knowledge of how the right leadership creates successful opportunities and successful organisations. So with both your backgrounds in mind, Julie, could I come to you first, please? Culture is often, quite rightly, seen as the most important facilitator of innovation. You've overseen innovation in large listed companies such as Aberdeen and also in smaller firms such as your own at Runway. What do you see as the cultural ingredients needed for innovation to succeed?
Thanks, Jill. Lovely to be here, everyone. I think there's really two cultural ingredients. And the first one is about being open-minded on the reason, that killer reason why your whole business model may need to innovate. And if we think about asset management, it didn't really change for a very long period of time. So active managers managed, their funds were all in their own brand. They sold through distributors and advisors, and everybody got a piece of that fee. And it was quite comfortable, and it was a symbiotic relationship. And then after RDR and MiFID disrupted all of that, and the only way to keep margin was to make choices as to what you're really, really good at doing. And we've now got distributors in this room who have launched wrappers under their own brand. And if you think about it, this really mirrors the entertainment industry. So I'll give you an example. You've got Disney has moved from one of the best manufacturers of studio content in the world, streaming to the end customer. And then you've got two amazing distributors, Amazon and Netflix, who have moved to manufacturing their own content. So innovation is all around us, and that first ingredient is to be open-minded and to look outwards at what's going on in the world. The second piece is really to recognize culturally that if you want to execute on innovation, you've got to be open to honest feedback about what your front office, middle office, back office experience entails. And so to create that culture of psychological safety, thinking about how you're surfacing anonymous, always-on feedback. Now, as you know, Runway does that through anonymity and moderation. But if you think about the juniors in your company, lots of them don't feel comfortable to raise their hand publicly and challenge the status quo. They might think their idea is stupid, it's been done before, their line manager could get annoyed. So think about the processes and the platforms that you're using to surface that kind of feedback. So there's two important pieces of cultural glue.
Absolutely, and I completely agree with you there. Vicky, similar to the question I've just posed, Julie, you've been hugely active in innovation for many, many years. First at your own FinTech startup, and also for large global institutions such as Goldman Sachs and most recently TPI-CAP. In your opinion, what are the key successes for leading innovation in both companies, large and small?
Well, thank you, Jill, for inviting me here today. It's great to be here back in person. I think while the aim of innovation is the same in both small and big companies, the challenges are completely different. So if we start first with smaller fintechs, when you're setting up a fintech, you're launching an idea, but you're also establishing a business. Sometimes there are newer leaders who take that step forward and create their own business. So the challenges there are on establishing team, on creating that important culture, on continuing to drive that across the organization, and really setting up a firm for success, getting the right people on board. So those leadership challenges are really about how you create something brand new. Now, if we flip over to bigger companies, there's a lot of established practice, and that established practice is often not conducive to innovation. So I think there's an important question to ask. Do you want to have your entire business be innovative, the whole company, or are you going to carve that out into a division or a team? So if we take the former, that's a deep set culture around innovation, strong leadership. There's flexibility and freedom, cross-team collaboration. There's thinking about how the entire organization can continue to ask itself questions, like Julie was saying. And then for creating a carve-out, kind of like Engine, or something Liquidnet is doing today as we grow out our credit business, it's about creating a separate group that can have its own processes, that's given the freedom to have some independence from the churn of a bigger company. It's also shifting from being time-based to milestone-based, because innovation doesn't happen in months or quarters or ahead of the next update meeting. It's much more based on when a product launches, and that you can't control for time.
Absolutely. And when I think about the amount of data involved in every decision now, Julie, I know Runway surfaces an awful lot of data. How have you witnessed the changes and during and post the pandemic? has hybrid working actually helped or hindered innovation?
It's a really good question, and we work with a number of asset management companies pre and post pandemic. I think there are two phases. So in the first phase, we saw asset managers innovate very quickly their communication platforms and supporting PMs and traders to work from home. So the core functions innovated well at pace. Runway as a communication platform, we saw a real surge in demand through hybrid because companies realized you can't replace walking around with zooming around, and instead you need to retool to foster that sense of connectedness and caring. But I think longer term, hybrid has actually damaged some of the key ingredients of innovation. If you think about the in-person spark that comes, especially when you bring cross-functional teams together, let's say for a problem-solving sprint, all of our data shows that trying to do that online is very difficult. Fatigue came up a lot on runways, video fatigue, back-to-back meetings. That lack of ability to sort of casually interrupt each other and build on each other's ideas as you get more and more people kind of onto your Zoom, it really does inhibit innovation. And the neuroscience around this is very, very interesting. It turns out that we make decisions with the creative part of our brain, and that relies on peripheral vision and subconscious communication. So our body language, our hand gestures, all of these things that you cannot see from a headshot. These things are really important when it comes to our creative decision making. And apparently, even seeing our own face constantly on the bottom right of the screen, who knew? But it's a distraction. It actually makes us subconsciously self-moderate. So there's lots of reasons why in a crisis we're able to get things done online, but actually if we can bring people back together, we can let that cross-functional spark really flow, and I think that's very important.
Would you agree with that, Vicky? Do you see that, you know, the culture has been affected within firms in terms of this hybrid and virtual environment that we now live in?
Well, I loved hearing the neuroscience behind it, because I have not enjoyed watching my own face as I do Zoom calls. No, I mean, having had the opportunity to get back in person, you realize what's missed. We're social creatures, we really feed off of each other. And I think in addition to some of the culture and dynamic that we have in being together, there's also the nitty-gritty, like the budget allocation. And to get an entire industry to work from home almost overnight took that as the primary focus and delayed innovation. So we're beginning to see, now that we're back in person, projects that got stalled, which are now coming back on board and being re-accelerated.
And again, that moves me nicely onto my next question, because innovation does swing in and out of fashion, and it's popular in good times and it's tossed to the back of the wardrobe in downturns, exactly at the time when arguably it's most important. And innovation will always accelerate change, and there is absolutely no surprise there. But often senior execs cite innovation as an important driver of growth, but few of them actively and realistically lead and manage it. What changes can leaders implement to build an organisation that isn't afraid of change and actively encourages innovation?
I mean, that is so true, and it's a deep frustration, particularly at larger companies. So maybe an example to tell a story. So Jill, let's say that you're a very successful CEO of a large FTSE 100 company.
Shortly.
Julie, you're the head of product. And Jill calls you in and she says, I have a great idea. I have drawn this picture of a rocket ship. This rocket ship is going to transform our business. Julie, please go build it. And you come back, you need to do this for the CEO, high expectations, lots of demand. You come back a month later with a better drawing of a rocket ship. You say, Jill, I've done it. And Jill is disappointed because she didn't want a drawing of a rocket ship. She wanted an actual rocket ship. Now, why has that happened and what needs to change? You need to have leadership with really clear communication. You need to have an open culture, question-asking feedback loops. But really importantly, it's about having leaders who help to drive solutions, not demand them.
That's a really good point. And you know, what is your one single piece of advice to the industry? What's the most important thing that we can do to make culture a facilitator rather than an inhibitor of change? Julie, what are your thoughts on that? Thank you, Vic.
I'm going to sneak two in. The first one is you've got to check who is role modeling innovation in your firm. It has to be your senior revenue generators. They are the ones that need to be part of that conversation about the rocket ship. They've got to turn up to the hackathons. They've got to give their time and commitment. That's really important. And lastly, tweak the reward model. So one of my previous roles was chair of the remuneration committee for a global insurer. We tweaked the model. We looked at the top 200 variable payouts, and we said, well, what have they done for innovation? So go through your payout lists, add a column at the end saying innovation impact. That's the biggest single driver that each person in this room can make to grow innovation in their firm.
Thank you, that's fantastic. And Vicky, your final thoughts, please.
I'm also going to sneak in too. I mean, innovation drives us to the future. So I think it's important that we aim high. Everyone in this room aims high, as well as creating the space that enables innovation to happen.
Well, thank you both so much. It's been short, but really, really insightful. And I hope we will carry on this conversation for many months to come. Thank you, Vicky. Thank you, Julie.
Wonderful. Thank you very much, and thank you, Jill. Thank you for hosting. Brilliant. I love also the fact that, so I'm very passionate about the diversity and inclusion conversation. I have a podcast called Diverse City Podcast, all about diversity and inclusion in financial services. And I love the fact that everything was framed around innovation, impact, growth and acceleration, rather than just talking about should we have more women in business. We have two amazing women on business, and they're here, innovators on stage. So thank you all very much indeed. I'll invite you to take your seats as we move on the programme. Thank you very much indeed. Thank you. Thank you both. Good, excellent, wonderful. So we're now going to move the conversation on. We're going to talk about impact investing, and I'm really excited about this panel actually, because we have some rock star panelists to guide us through it. What I'll do actually is I'm just going to say names. Come on up while I introduce you all, and take your seats. And Miranda, if I could encourage you to sit at the end of the panel, that'd be wonderful. Thank you very much, because this is Miranda Seath. She's our moderator. She's the head of market insight at the Investment Association, and also chair of IFAMA's European Fund Classification Task Force. She is joined by Giles French, who's the External Affairs Director at the City of London Corporation, as well as a key lead on the FCA Sustainability Digital Sandbox. Darshita Giddies joins the panel. She's the founder and the CEO of FinTech Manch, which is a multi-award-winning global impact platform and a FinTech member. And last but no means least is Natalie Pullin, who is the sustainability specialist at Microsoft. Miranda, over to you.
Thank you so much for that wonderful introduction. And I have to say, we've got a lot to unpack in this session, but I had to start with some data as head of market insight. So our members manage about 9.4 trillion in assets. About 0.5% of that is invested in impact investing. So it's still a really small percentage. You compare that with ESG integration, which is around 50% of assets being managed, looking at ESG risk factors. So it's still small, but growing. But what we want to talk about today is about data and thinking about AI. And another key takeaway that I had is we've just finished a series of investor focus groups looking at sustainability. And one of the big things that they talked about when they told us what their views were on sustainable investing was they want to see some kind of measurability. So I'm really interested to hear what the panelists think about our exam question today, which is sustainability and impact investing, how data and the use of AI is facilitating improved client engagement. So I'm going to start off by asking Darshita for your opening remarks on that point, and then I'm going to go across the panel, and then we're going to open it up for some discussion. So Darshita.
Thank you. I think data is the holy grail when it comes to how the world and especially investment management is moving. First point I would say is for investors, just making a green choice is not the only option, and it won't be the option. So question is, how do you leverage data and insights to turn your existing investments into greener investments. And I think that's where AI can play a huge role, because once you have data on what part of your investments actually need to still adopt greener practices, then you have the data trail to show that you're actually making the world a better, greener option while still delivering the market returns that you've promised.
Perfect. Giles, what's your take?
Well, thank you, and thank you for inviting me today. So, I mean, at the City of London Corporation, for the last few years, we've been working on how can you use technology and data to accelerate investments into sustainable or impact investing. And that's been looking at both, how you collate data, how you validate it, how you compare it. But a lot of our focus in the last year or so has actually been more about collaboration, actually bringing together the incumbents, the major financial institutions, experts in sustainability and impact investing, but those also developing the technological solutions. And the reason why we're really focusing on that, and it comes back to the point really about sort of comparability of data, is to make sure that those who are at the forefront of designing the solutions actually understand what the real market need is. So I think one of the things we've seen over the years is there can be a discrepancy about, and it's putting it simply, someone might think they have a great idea, but no one wants to buy it. So actually, how can we create an environment where actually at a much earlier stage, those technological solutions are working towards solving a problem which the industry has?
That's super. And Natalie, what's your take on this?
Great, thanks very much, and thanks very much for having me today. I'm actually just building on what Giles was saying there. I thought I'd just dive in with a little case study here. So we've got quite a few that we can talk about today, but in particular for this question, we've been doing some work with an organisation in Africa called EmTech, and it's actually solving a couple of challenges here. Is how do we, for communities who have not really been in the financial system before, how do we help them understand how they can finance something that they particularly need, which is energy in the form of solar panels. So how can we, through technology, bring together finance providers with the providers of solar panels and help drive social good in Africa? And that's exactly with one of the case studies that we have here today. So what that actually required was you have the solar panels, you have Internet of Things giving you data from the solar panels. You have a customer app where the customer can go in, and that's also where they can use, that's where they can pay, and all the billing data is, so that you can track customer behavior in bills and paying, and also that app provides a platform to be able to offer out the right types of content, again, looking at customer behavior. So what sits behind that, as well as getting data from the Internet of Things, you've got big data and machine learning driving those models, helping those financial institutions understand what those risk-reward profiles are around providing finance to this particular market who have not been traditionally banked, and obviously making sure that we can, offer these solar panels to the organisation. I think EmTech last year sold 100,000 of these solar panels, particularly through using AI and data to be able to provide the right types of services to impact investors.
Well, that's a fascinating case study. Well, I'm going to open it up a little bit more and let's try and make this conversational. But we've heard a bit about data requirements evolving. We know there's a huge amount of regulation, which is also pushing some of this. But we're trying to think about it from the lens of the investor. And one of our firms, I remember having a conversation with me, has something like 40 data feeds that they're pulling into their reporting engines to try to actually make sense of what's going on in this space and report to their investors. So, Darshita, how are data needs evolving, and how can you actually turn that into something that's meaningful for investors?
I like to break the complexity of investment management into 3 parts. So one is the role of the investor asset manager. Second is the role of companies that provide the underlying data. And third is the role of the tech-enabled solution that is actually now helping streamline what kind of actionable intelligence that can be driven from the data that's out there. Companies do collect a lot of data. I imagine, Natalie, you're aware of the challenges, because there is a lot of information. And when we talk about non-financial indicators, in this case, when we're talking about impact or sustainability or ESG, these data sets, firstly, haven't been crystallized into sort of globally accepted norms. Just like we have very clear standards around how we define profit or how we define depreciation and how it's done. We don't have such clear definitions around what is a number around culture and diversity and innovation. We are starting to get that kind of precision when it comes to environmental indicators. What is scope 1, what's scope 2, what's scope 3. So we're going to see a lot of attention going to defining these non-financial indicators better. That's going to help companies track the right information, and that's going to help investors receive and consume that information. That's going to enable them to make their actions a lot more aligned with their strategic priorities. And this is exactly where, Giles, you mentioned the role of collaboration, is where tech innovation can really support the movement to go fast and faster. That's because when we talk of ESG, sustainability, or impact, we can really break down the risk into 4 categories. One is some of these are universal risk, like climate change. For this, asset managers or companies do not need proprietary or very bespoke solutions. These are solutions that really the industry can collaborate on. The same goes with sector risks. So fashion industry will have certain risks and certain indicators. And for this, again, collaboration and AI can really help fast track that journey. And then there are going to be company-specific risks, as well as more opportunities that the company's management can drive and enable. That's what's going to deliver the return, the alpha that you're seeking. It's not going to be around the universal risk, because everyone is going to have access to pretty much the same data. I'll stop there for now.
No, that's really interesting. I'd like to pick up a little bit more on that point about AI, because, and maybe think about it from the company level, because what we are seeing is a huge demand for companies to report across lots of different areas. If we look at the UN SDGs, which a lot of our firms are trying to align some of their strategies with, there are 17, and that ranges from biodiversity to responsible production and consumption. So Natalie, I mean, just thinking about the challenges that companies face in reporting this data, how can AI start to help solve some of that for them?
Sure, okay, so I think a lot of the work that drives us in our team, and I work in an industry agnostic team actually, so I'm not purely aligned to financial services, although I do like to work with financial services wherever I can. So if I think about the guiding principles, they're actually the GHG protocol guiding principles around data. And actually, I'm not a data expert, I'm more in sustainability, so perhaps maybe if there's data experts in the room, they'd say, well, these are data principles actually, Nat. But if I think about what drives us, we think about completeness, relevancy, accuracy, and transparency and consistency. And these are the guiding principles that we want to think about if we want to actually achieve the goal. So if we think about a company that we might be investing in, they've all set big, bold goals, but how do we know if they're actually tracking against those goals, and how can we bring that into the work that we do around risk and reward? And I think, how can technology help you with that? So if I think about data completeness as one example, so the customers that we're working with at the moment, you know, they're thinking about, they're coming to us with the burning platform around disclosures, you know, TCFD, et cetera, particularly in the UK, of course. They're coming to us around that. And and they have an enormous amount of data that they need to be able to collect on their own organizations and out into their value chain. And completeness is really important to them. If you think about, I mean, you talked about 40 different inputs. I mean, I've got one customer who's got 250 different types of inputs when it comes to E, S, and G, and it's structured and unstructured data, right? So actually, this is a couple of points I'm going to make here. But the completeness one is you've got all different types of ways that you can collect data. It's manual, you can use OCR, which is to extract data directly from digital invoices. That requires AI in itself. There'll be mistakes in data, even if you can get data directly from your suppliers and your vendors, which is a capability that we're working on at the moment. There's going to be gaps and data completeness. So how can you use like anomaly detection? How can you use AI to help you with the completeness principle? It's super important. How can you help, you know, and then I think about accuracy and transparency. How can you use artificial intelligence and machine learning, et cetera, to help you understand if the calculations that you're doing are correct? You know, you need to train the models. You need to be able to use proxies, et cetera, to be able to build your model. So, you know, we see it all the time, particularly, I mean, sustainability, I just feel that without advanced cloud computing, without the capabilities of AI and machine learning, we wouldn't be able to make the progresses that we are making. Because I think that lots of organizations have been thinking about, well, we know they've been thinking about sustainability for many, many years. And I think that maybe one of the reasons why, well, I would say this, right, I work for a technology company, but one of the reasons why the progress hasn't been made in the way that we wanted to is it's just so complex to get all this different type of data and mash it all together and make sense of it. And, you know, come in left, enter stage left, AI and machine learning, and it can really solve and make some progress for our organizations and solve some of these challenges.
Jules, I think you wanted to come on.
Yeah.
Yes, no. So
I'd take a breath.
No, it's entirely recognizable, I think, everything you just explained, Natalie, from the work we've been doing on the digital sandbox. And I think one of the thing I was going to pick up was the point about you know, manually inputting data and sort of real-time reporting. And one of the interesting areas which has emerged during the sandbox cohort, which we've been working on sustainability, is about how can you use things like Earth surveillance, satellite technology for real-time reporting of impacts, particularly, you know, physical, environmental degradation. And when you start thinking about things like that, that's much more interesting because you can, sorry, not more interesting, but the potential impact of that is enormous, not only because you can have much more accurate real-time data for investors than others, but also that you can then potentially look more easily at supply chains, which is another real sticky point for data. So companies can have, you know, fantastic data and input for their own activities, but they may have much less of an idea about what's going on in their supply chains. And we all know that you know, the third-party validators of ESG, investors, frankly, you know, pressure groups, they expect firms to be able to confidently say what's going on in their supply chain as well. So using things like AI, machine learning, satellite technology can actually help to address all these things at scale.
Yeah, I think particularly around biodiversity, really complex. I think you made the point around climate risk, carbon. It's a more mature area, although obviously getting the real data is still a challenge, but particularly around ecosystems and biodiversity, you know, the geospatial data that's required, you know, the way that AI can support getting, you know, granular insights is you know, it's fantastic.
Yeah, and I think the same goes with, you know, what kind of information do investors need? Because there is a lot of granularity in data that's available. The next part of the question is, how do you distill that to give investors an overview effect on what's going on with their investments? Most of asset managers will have either analysts or engagement teams or stewardship teams that keep in touch with the company to get those data sets. But again, there is not enough technology at the moment that allows investors to track this in a meaningful, structured format. So even large asset managers like BlackRock, Aviva, at the start of the year, they will request their companies to have transparency in their supply chain, or they'll ask for their execs to have compensation linked with climate targets. And later on or through the year, their investment teams are doing the engagement. Do you have this? And where does all this data sit? At the moment, it sits on emails, on handwritten notes, on maybe some of them have CRM systems as well, but it's not sitting in structured ways in which allows asset managers then to say, and here is the specific aspect of this information or this organization that's a risk that still needs managing. And I think that's where innovation is going to be the most valuable for asset managers.
It's a fascinating point about supply chains, particularly as we've seen it this year with first COVID and responding to that with supply chain dislocation, but then also thinking about the tragic events in Russia and Ukraine and actually understanding exactly the risks that your supply chain is facing. So really interesting point. Thank you, Giles. Because and this does go back to the point that clearly there's a lot of scrutiny. The regulator is looking at this area, particularly with the lens of trying to stop greenwashing as well. And I know that you're very involved in the FCA's digital sandbox, which is thinking about how firms can innovate, but also trying to put strong governance structures around that. So it'd be interesting to know from you, Giles, what should firms looking to validate their SNRI data solutions, what should they be thinking about?
Yeah, thanks. So, I mean, the second year that we've worked with the FCA in this digital sandbox, and we chose sustainability data reporting for this year's cohort because today's conference proves there's an insatiable demand for it. And I should pay credit to Ravi and his team. They've been fantastic to work with, and I think have been very imaginative about how they work with sort of potential new providers and solutions. So what we did, so we initially worked, we sat down with the FCA and others to try and work out what some of the potential use cases were that we could investigate in the sandbox. And we sort of started naively thinking, well, there's a lot of technological innovation already in this space, but actually we identified over 150 potential use cases, because I think which actually shows not there's a problem, but there's probably like a multiplicity of solutions out there, and actually that is one of the challenges for firms. And I think one of the things we would say that actually it's not just incumbent on the startups or smaller potential solution providers. Actually, large firms need to know what is it they're trying to solve, what's the problem they're trying to address, what data is it that they want to use, and not really just sort of a generic, well, we kind of need to be better at reporting or validating or comparing this stuff, because actually that's really difficult to solve. So I think that sort of clarity about what the problem is the company is trying to solve is absolutely crucial at the start. And that's big, and I take that back to my opening remarks, where there is also a challenge where matching this market need with potential solutions is so crucial. So early intervention, early conversations can really make the difference. And I think that's one of the other things we'd say, particularly for the larger firms to think about, is often these smaller firms or these startups, they don't know who to speak to in the firm. They don't know who to get to really understand the problem or to propose the solution. I know none of this is deliberate, but it's just that, a large organization with thousands of people, where do you start? How do you get in? So that's where, for us, I think the sandbox has particularly shown its value. We identified 12 businesses to test their proposition out of, I think, 40 to 50 that applied. We were looking at sort of validating of ESG, transparency and understanding. And I think that all of the firms have found that a hugely valuable process. We give them access to real and synthetic data, to experts in both ESG and sustainable finance, sort of mentors in financial services and the legal profession. And the sandbox is not there to endorse a particular solution. It's not there to say this is the way to do it. But what it is to help both parties to create better potential solutions. And I think what we found was that some have basically had their proposition endorsed, and people have to go, yeah, there's something good here, and this is something which is potentially going to scale and can be an answer to these challenges. But others have actually learned, no, we're coming at this in the wrong direction. The data isn't available in the way we thought it was. Businesses may not want to share certain bits of information that we thought they would. So that has then been hugely valuable as well, to know how they can adapt their proposition to address the original challenge.
And Darshita, I'm interested in your own experience, obviously developing a solution and taking it to asset managers. Does some of what John's saying kind of ring true for you?
Oh, for sure, for sure. Also, there's no budget for sustainability. So,
Might be changing.
but you know, that apart, how we went along was, my vision was every money that we spend, we give, or we invest has impact on people and planet. And how do we capture those data sets? So my first idea was an engagement or an impact tracker for asset managers to track the impact of their investments. And when we started showing the idea in rough wireframes, and we asked questions, they said, no, but we actually have a need just around engagement. How do we track our engagements, and then how do we report that on the UK Stewardship Code, or how do we report back to our investors? And so the arriving of the solution was really led by what the market needs, because to track a big thing like impact, you still need to have operational efficiency in an organization to give yourselves and your teams the mind space to think about bigger questions. So I think the way we've sort of come to the solution has been very much customer-led and very precise in terms of what's their need now. And obviously the coming need is reporting on SFDR, and correct labeling of products. But again, they're going to need data trail to show that what they've classified their products as actually are the right classifications. And they're going to need quarterly data feeds from their investments to ensure that the indicators map up. So I think we made the right choice in terms of not pushing a product, but actually engaging with customers and trying to identify what their pain point is right now, and still holding true to the larger vision and driving the product through a need-based approach.
So I'm hearing, find out what your customers' needs are. That's absolutely critical. We've got 1 minute, so I'm going to give the last word to Natalie. Sorry to put you on the spot, but what advice would you give to providers coming into this space in terms of developing these solutions from your own experience?
What advice would I think, you know, really just to actually just steal Darshita's, it's really know the problem that you're trying to solve. And I think actually Giles said it as well. If you think about disclosures, people just say, right, I need to collect all this data, I need to disclose against it, help me. But actually, we really need to still unpick with them, even when it comes to things like carbon reporting, which is already mandatory. You know, what actually are you trying to solve? What do you need to drive after you've got those disclosures? What data do you need? That really important point about relevancy. You don't need to collect absolutely everything under the sun. Only collect what you need to collect. A bit like the SDGs. You don't need to follow all 17. Just focus on the ones that are really material to your business. So I would say, understand what's material to your business or the problem that you're trying to solve, and absolutely start there.
Well, on that note, we've got 5 seconds left, so I think we're on time, but thank you so much. Please give a hand to our panelists.
Fabulous. Wonderful. Thank you very much indeed. Thank you. Thank you to all the panelists. And I invite you to return to your seats if you would. And thank you, Giles, Darshita, Natalie, and Miranda. Wonderful. So now we're going to have the conversation regarding cryptocurrencies. We can't have any kind of investment discussion without the conversation about cryptocurrencies. And here to guide us through what we should be paying attention to in cryptocurrency and investment management, it's a great pleasure to welcome to the stage the head of EMEA ETF Equity and Commodity Product Management, Invesco. It's Dr. Chris Meller. Chris, over to you. Thank you.
Thank you very much. Good afternoon, everyone. It still feels like morning to me, but with the clocks changing. And what a wonderful venue to be speaking about cutting-edge technology. And just to give a brief introduction to myself and sort of my history in cryptocurrencies, as you've heard, I'm head of equity and commodity product management for the ETF business at Invesco. We started looking at launching blockchain-related ETFs about 4 or 5 years ago, and that's where my introduction to cryptocurrencies began, and it's been a fairly long journey, I think it's fair to say. What I'm going to cover very quickly in the next few minutes is just a brief introduction to what a cryptocurrency is, what it's for, and then, more importantly, how it's being applied in the financial industry more broadly. So if we start off, first of all, with the key question, I suppose, which is what is the point of a cryptocurrency? The point of a cryptocurrency is really that it brings together two features, key features of physical cash transfer and electronic transfer. So it brings together those features of physical cash and digital money. So if you think about physical cash, it's the thing that's driven the global economy for the last several thousand years. Physical cash, I can take out my wallet, I can pull out a £10 note, I can go up to someone in the street, I can pay them for a coffee or a cake or whatever. All they need to know is that I've got the money and that I've given it to them. They need to know nothing else about me. It's an entirely anonymous transaction with no friction and simple and straightforward. You could argue that I could do exactly the same thing. Rather than pulling a £10 note out of my wallet, I could pull a credit card out of my wallet and I could swipe it on their terminal and I could make that same transaction. The difference is that that second transaction, that digital transfer, is occurring via a network of intermediaries. It's Visa or MasterCard, it's my bank or my credit card company, and multiple layers, multiple transactions and multiple intermediaries. The anonymity is gone, for starters, and it's a much more complicated system. What blockchain does and what crypto assets are built upon a blockchain, what they're doing is bringing that anonymous transfer to the digital money space. And when you dig into it, that actually has a lot of potential interest and a lot of potential applications. In terms of the next question, so we've talked about why, here's the what. What is a cryptocurrency? Well, there's three ways you can describe a cryptocurrency. And if we take the example of Bitcoin, which is the most popular, and we'll talk a bit more about the crypto space, Bitcoin can be thought of as three different things. First of all, the asset itself. So when you talk about Bitcoin, people think about the price of Bitcoin. You know, a Bitcoin itself as the unit of measurement, or the unit of currency, is basically created as an incentive for adding transactions to a blockchain. That's where it sits in the blockchain itself. Worth, you know, currently something like $45,000 before I left the office this morning. And as a simple thing, it's just a unit of currency, a unit of value. Behind that, though, is the Bitcoin computer network. Now, I refer to it as Bitcoin computer network. This is just a group of computers. There's no centralized authority controlling it. Currently, there's something like 50,000 nodes or computers in this network, and the network itself is the computers that run it, the miners that own those computers are running those computers, the wallets which are used for storing the Bitcoin or keeping record of the Bitcoin, and the data that sits behind it. The final thing you can describe Bitcoin as is the protocol itself, which is, if you like, the algorithm or the rule book that defines how that computer network operates, how blocks or transactions are added to the records, added to the blockchain, and who or in which wallet each of these units of measurement, each of these Bitcoin is currently stored. All of that's done through a decentralized process. So transactions are added in both an anonymous and following the rules of the protocol in a decentralized way. I've used Bitcoin as an example here. The same approach applies to every other cryptocurrency out there. There are nuances about how transactions are added and proof of ownership versus proof of work and so on, but ultimately it all boils down to the rules and the protocol that underlie it, and whether that is a valid transaction or not. Let's talk a bit more about digital assets within the broader space. So if we start off, you know, all crypto assets, as at the end of last year, reached around about $1.9 trillion in total value. To put that into context, that's a few $100 billion less than total M0 money supply in the US. So total US dollar cash in circulation is slightly larger than the entire cryptocurrency space. It's also a little smaller than the total market cap of Apple. It's around about a fifth or a sixth of the total value of gold holdings in the world. We've had a lot of focus on gold in recent months, but it's still, frankly, dwarfed by the size of the broader equity market. The US equity market alone is $55 trillion, or just below $55 trillion. Within that crypto space, about 40% of the assets today are in Bitcoin, with Ethereum in second place, half the size, about 20% of the crypto asset space. And then it's fair to say that there is a very long tail in terms of coins, literally thousands of different digital coins, with the likes of Tether, Cardano, and so on, as relatively small, but the larger end of that space. But primarily what you're talking about for an institutional type of investor is, Bitcoin, Ethereum are the key areas that may be in focus. In terms of the digital asset space itself, if you think about it from an investor perspective, this is just looking at the growth in use of digital assets, as measured looking at digital asset exposed ETP, so exchange traded products. And you can see that that's grown relatively rapidly. Just to be clear, this is a logarithmic scale on the chart, so a smooth line up means that it's growing effectively exponentially, with assets passing $5 billion for European domiciled products on their own back at the tail end of 2020, and continuing to grow from there with significant growing interest. In terms of where it sits in a portfolio and how investors think about cryptos, there's very often the analogy made between Bitcoin and gold, and I think that's probably a good starting point for the discussion, although clearly not the ending point. So most of the reason when I talk to investors that they're looking at potentially or taking an interest in crypto assets is for one of three reasons. The first is diversification, and I'll show you a chart very briefly in a second on the decorrelation or the low correlation that these assets have. I think it's fair to say that as they become part of the financial mainstream, you can probably expect that correlation to pick up, and certainly, when we get big market sell-offs, as we had recently, digital assets sold off at the same time as equities. But certainly there is a diversification angle to looking at cryptos. The second is sort of the theory or the idea that these may provide an inflation hedge. So built into the Bitcoin algorithm, that Bitcoin protocol, is a determined issuance rate of coins. And in fact, if we look at the issuance rate, something like just over 80 or 85% of all Bitcoins that will ever be produced have been produced already. And there is a decaying function built into the algorithm that means that there is a slower and slower issuance of Bitcoin going forward. So if you have an asset that the growth in supply, the key driver of price is going to be the demand dynamic on the other side of that. So again, the analogy to gold is quite apt. Gold, we have an awful lot of gold in vaults. We've dug it out of the ground here and put it in another hole in the ground there. Supply is still relatively limited, though. It grows at something like 1 to 1.5% per annum as it's mined out of the ground. That analogy also works quite well. Obviously, we're talking about something that's been around, in the case of Bitcoin, for just over 10 years, so we haven't really had a chance to see how it performs in a real inflation scenario. We may get that in the coming years, potentially. But the final use is obviously speculation, and this is another tool that allows an investor to take a view on where they think the direction of this market is going, and certainly that's been one of the drivers of usage from perhaps a less professional audience, I think it's fair to say, in the early years of these cryptocurrencies. Drives of futures returns, clearly there's an awful lot going on here. I think the key things to focus on in cryptocurrencies is first of all, how well these are adopted, and picking between different cryptocurrencies will depend on whether you think these are going to be used and continue to be used. As I said earlier, the biggest positions are in Bitcoin and in Ethereum as the most developed and most supported crypto assets. Other areas to think about, network security, how does the algorithms work, how does it tie together? Is that changeable? Is it variable? And different coins will have different exposures. Thinking about market liquidity as well. Again, one of the reasons that Bitcoin and Ethereum are topping the discussion is because they tend to have a deeper and more liquid market. There are obviously things like regulatory developments. I've already touched on supply and inflation to a degree. Regulatory developments. How do the world's regulators deal with cryptocurrencies? At the moment, we have a pretty broad array of approaches, with some more pro and some more concerned. But I think we're starting to see, the regulators becoming more involved and building a more regulated landscape behind crypto, which I think is a positive for their use and uptake in institutional investing. And then finally, obviously, technology will continue to develop and have an impact. I talked a bit about correlation, just to give you some numbers or to show you some data. It's probably very small from the chart, but the first column on the table here is showing the correlation of Bitcoin with a whole array of different asset classes, so equities, gold, or gold equities, fixed income. And you can see that just from the color, it's a sort of fairly bland whitish color. So a pretty neutral, close to zero correlation. This is showing over the last 5 years, compared to a dark red, which is correlation being high, and green when you have a negative correlation of the classic US Treasury versus other more risky assets. So it sits reasonably well as a diversifying asset based on the data that we have. The other thing to say is that this is still a very new market, and you can see on the right there that there is a very high level of volatility in these assets. That volatility has been decreasing as we've seen increased adoption, and I think that will also increase over time as we get further inclusion in portfolios from more professional investors. Final thing to say, and I think I've had the 1 minute sign, so just briefly about getting exposure to crypto assets. This is an interesting example where actually an individual investor perhaps has an advantage. Direct investment in crypto coins is incredibly easy to do. It takes the use of a mobile phone or a computer with access to the internet and the ability to transfer cash into some form of account, and you can invest in these coins. That's one of the things that also worries the regulators because of the ease of which people can get exposure when perhaps they shouldn't be. One of the key things around direct investment is the asset, unlike that gold example that I talked about earlier, where you have your sovereign in your pocket or your bar in a vault, the asset is actually held and maintained on the database that sits behind the digital currency, and that's maintained on all of the computers in the network. So to secure that asset, you have to have your private key, which is a code used to unlock that wallet and make a transaction. Protection of those keys is the key thing for an individual investor. For a more professional investor, it's really a question of, do you go direct investment yourself, which means you need to secure those keys, which is somewhat harder to do for a professional than perhaps an individual. It's all a question of trust after all. Or you can go through either a physical Bitcoin ETP route, or you can go through the futures market, where currently the CME offers futures on Bitcoin, Ethereum, and indeed options on top of those. But with that was a very quick tour of the crypto space. If you have any questions, I'll be around after the presentation.
Wonderful. Thank you very much, Chris Miller. Thank you very much. Thank you.
Thank you.
Thank you, Chris. Thank you. Quite impressive, sort of crypto in 15, very impressive. Wonderful. Listen, I'm very excited about the next panel. I get very excited about the industry full stop. But I'm particularly excited because we have a very special guest with us today. And Gillian is going to be running a fireside chat. Please make some noise as we welcome the the CEO of Innovate Finance, the UK's FinTech Industry Association, Janine. Janine, how are you? Very good. Thank you. Gillian.
Well, good afternoon again, everyone, and I'm just delighted to have made it to the stage with two shoes, so it's a good start. Janine, thank you for joining us today, especially with your super busy schedule in the run-up to Innovate Finance Global Summit, which is back here?
Back here next Monday and Tuesday. So hopefully see all of you there, and I know we're working with you very closely as well.
So no, that's fantastic. I mean, we've got a brief session, but it's going to be insightful, I'm very sure. And I'm really keen to hear more, you know, from your perspective as your role representing UK FinTech. I'm particularly interested, actually, to gather your views on the progress made since the Khalifa Review, especially on national connectivity and international attractiveness. How far have we actually progressed in the last 12 months?
Gillian, it's a great question. And firstly, I just want to say thank you so much for having me here. It's so fantastic to see everyone in person. The novelty hasn't worn off yet, even though we're coming out of COVID. I think with regards to the review, we are just a bit over 1 year on. And it is fair to say that we've made some really very positive and very strong progress when we look at the fact that the majority of recommendations were actually taken up. So we had some great movement very early on, the announcement from the Chancellor at IFGS last year about the scale-up visa, which we're looking forward to coming into implementation right now. We had some excellent progress in terms of the FCA and HMT working on revamping the listing rules, so the dual class share, looking at reducing the minimum requirements for the free float, as well. We were also very keen to see government support put behind the Center for Finance, Innovation and Technology, which is going to be a core body that will help to move forward in terms of financial innovation and ensure we have a sector that is conducive for all. Now, there are also some great initiatives that have come out on the international front with regards to DIT, so the FinTech Export Champions as well, the Academy there. So very, very keen to have seen this progress. And I think if you talk to the FinTech ecosystem, there's quite a positive feeling about the momentum and the delivery of what has been made thus far. However, that being said, what we are very aware of right now is that we do not want to rest on our laurels. So we have to keep moving forward. We have to keep pushing ahead. We have to keep up this momentum to ensure that we are a global leader in financial innovation here in the UK. So that means industry has to come together with government, with regulators in order to push ahead. And there are a few areas that we need to take into consideration. I think it's very core that we see and engage on a cohesive strategy with regards to new technologies like crypto, for example. I think it's very core that we make sure the different government departments are working together and collaborating on an overarching strategy as looks to FinTech. And then on the international and the national side, we've seen some great strategies for the different international hubs come out of the past year based on some of that momentum from the Khalifa Review. But we're very much calling for even further focus on how we can help to build and develop those different hubs across the entirety of the UK. There's so many centers of excellence. We want to make sure that we are both promoting that and driving also funding into those different regions as well. On the international piece, we have an outstanding ecosystem here in the UK. 11.6 billion US dollars went into UK FinTech over the course of 2021. That means we are second in the world only to the United States. We are ahead of the next 6 European hubs behind us combined. We are a leader in financial innovation. It is absolutely critical that we make sure we are positioning ourselves on the global stage, that we are coherently, cohesively talking about the great successes that we have here. And that is an area we would like to see more of. Innovate Finance, about 2 weeks ago, we launched an international FinTech group in collaboration with DIT, which is going to be focusing on doing just that. So making sure we're bringing together the different bodies across the ecosystem and positioning the UK in its rightful place as such a global leader. So strengthening our attractiveness to bring FinTechs here, to start here, to scale here, and to build here, but also supporting our FinTechs as they scale abroad as well.
And that aligns closely, obviously, because we're working together with the work that we're doing with our global partners and the work, the international piece, which is only going to grow, isn't it? Thank you for that, Janine. Another area I'd really like to discuss, and we have touched on it a bit earlier today, is that of financial inclusion. So prior to the pandemic, there was an estimated 12 million people living in the UK with less than £300 in their bank accounts. And actually, 4 million people in paid work were actually living in poverty, which is, horrendous, isn't it? How far do you see tech transforming norms and actually creating that greater financial accessibility and inclusion?
It's so critical because I think when we look back to the time that many suggest is really the initial blooming of FinTech back to 2008, 2007, there was this sense that FinTech grew out of a need to put the customer back at the center of the proposition. And that's what we've been seeing over the past 10, 15 years as well. And perhaps during the pandemic, it was more than anything, the role of technology in every single part of our lives was underlined, but particularly when it comes to financial services. So this is on an individual base, on an individual retail consumer. But when we talk about financial inclusion, it's also important to think about the role of FinTech and alternative lenders when it comes to supporting SMEs, which we know are very much the engine of the UK economy. We've done some research that showed that before the pandemic, around 60% of all SME lending was actually done by the alternative lenders. So the FinTechs such as your Starlings or your Funding Circle, et cetera. We're very keen to ensure that as we sit on the precipice of one of the most difficult cost of living crisis coming out of this pandemic with the situation in Ukraine, making sure we highlight the role that financial innovation has to play in terms of both broadening out financial inclusion, but also financial wellness. So we talk about the unbanked, we talk about the underbanked, but also the individuals that have some money that maybe want to make their money work for them or understand financial services better, understand how to save, have better choice, have better engagement with the industry. These are all areas that FinTechs have a key role to play, but also that collaboration between incumbent and FinTechs is absolutely core to helping us push forward.
Absolutely. And following on from that, the finance sector has a key role to play in our future, and the transition to a low carbon, more sustainable, more inclusive, more collaborative world is here. Where do you see the most important innovation in this space?
Oh, I think there's so much happening right now, and there's a real understanding that financial innovation is a key player in helping us all to get to that net zero future and reach our goals within the space. FinTechs working with incumbents can help both individuals and SMEs measure their carbon footprint, to understand the data around the space, can play a key role in terms of impact investing as well. But ultimately, FinTechs and their understanding of the data will help all of us to make better and more informed choices, which is absolutely critical if we are going to reach a more sustainable and a greener future. There's also the question of making sure that not only are FinTechs helping others to make those decisions, but we have a responsibility as the financial services sector to make those right decisions as well. And how can we ensure that we are creating businesses that are greener, more sustainable, and better, really, for all of us?
That's really insightful. But I've got one last question before Julia reaches to the stage. Could you give me your one point of optimism in terms of innovation for 2022?
There's so much. There's so much to be excited about. But I think I'll phrase it this way. I think we're at a very difficult time at the moment in terms of the world. If you look at geopolitics, if you look what we've come out of in terms of COVID, the war in Ukraine, the cost of living crisis that sits ahead of us. My optimism is that the FinTech community has never been one to take challenges lying down. So they've always stood up, they've always taken the obstacles and overcome that. And I think that's what we're seeing right now as FinTechs have really come up to that bar, and I believe we'll see that going forward as well.
Thank you, Janine. It's lovely to have spoken to you today. Thank you.
Thanks for having me.
Thank you very much indeed. Wonderful. And thank you, Janine. Thank you, Gillian. Fabulous. I'm particularly knowing how busy Janine is right now. It's very grateful for you taking the time to be with us. Now, we talked earlier about crypto. There are some other areas we must explore today. So one of them is going to be about quantum computing. That comes a little later. But right now, we're going to talk about artificial intelligence and the metaverse. And here, we're going to be exploring how it will impact your asset management portfolio. And here to guide us through it is the founder and director of the Deep Learning Strategies Limited. It is Imtiaz Adam. Imtiaz, welcome. Okay, so over to you. Okay.
Thank you. Well, thank you for inviting me here. Just by way of background, I'm an ex-investment banker. I was the founder and global head of Morgan Stanley's climate finance and carbon trading business. I was there for 8 years. After that, I went on to do a master's in computer science, specialized in AI, which was focused on portfolio management. So I think we're just going to have a quick overview of how. So this starts just showing like the picture of how AI in the metaverse is going to impact your sector, which is asset management, fund management, across the various areas, ranging from ESG, holographic interactions, the fact that you can use AI for both portfolio optimization, alpha and index tracking, and the fact that RegTech, which is very high up, is a key thing. But the main thing is that it's going to transform the entire economy and reshape your portfolio holdings. So what is AI? Well, AI, as we can see from here, is computing systems that are capable of performing tasks that humans are very good at. For example, recognizing objects. But the areas that have been driving it in the real world are machine learning, which is a field of AI that applies statistical methods to enable computer systems to learn from data towards what is an end goal. So data is key. And then deep neural networks, which is a form of machine learning. We won't go into too much detail about that right now, but it essentially has input and output layers with hidden layers in between. And that's been very powerful for things like text, language, and computer vision that have been driving a lot of the AI revolution over the last 10 years. The AI market, I like this from KPMG back in 2018 when AI was arguably overhyped. But even then, you could see the important thing is the trajectory 22 to 25. This market really explodes going forwards over the next few years and will impact you in everything you're doing. And we'll come on to this theme of 22 to 25. Why is it relevant to you and in your holdings? Well, let's look at how the internet revolution and AI is already impacting your portfolio. The mega cap stocks. If you look on the left, who have been the major acquirers of AI since 2016 onwards, in particular, Apple, Alphabet with Google there, and of course Microsoft. And we can see their performance on the right over the last 5 years. And the stock returns are similar to that of a startup, let alone a mega cap, a huge company, relative to the oil majors, with Exxon being the largest market cap in the world 10 years ago. And again, we can see against the S&P 500 on the left, with the yellow there, versus the mega cap stocks, the AI giants, and again, Tesla, which is an AI and robotics company, against the legacy auto sector. I think it speaks for itself. So AI is going to completely reshape every sector of the economy, be it healthcare, with medical imaging, text analytics, robotic surgery, be it drug discovery, which is already creating unicorns, some of whom might IPO in the future, security sector, cybersecurity, retail, where Amazon's already had a field day, but others that are going to come through, transportation, marketing, every single sector. What is the metaverse? Well, the metaverse is summarized as simulated digital environment, and we're going to see tech convergence, as this diagram on the right shows, between standalone 5G, and that's the keyword standalone, because right now most 5G networks are piggybacking on 4G, so the real exciting 5G will probably come from the end of this year and next year onwards. Standalone 5G, blockchain, AI agents, mixed with augmented reality and virtual reality for a rich user experience. It was coined in 1992. Blockchain, you've already had a talk on, so I won't spend too long. This is a nice graphic which shows actually that crypto assets are very diverse. We actually work with some of these security tokens, which is going to impact bonds, in particular green bonds. HSBC have shown that green bond issuance through blockchain is 10 times cheaper than conventionally. And you create liquidity and transparency. It will impact property investment, it will impact equities, the whole area. So, and in particular, MiCA, the market in crypto assets, the EU have a harmonization directive kicking in next year, which is going to see this market really explode. A key barrier has been the high emissions of Bitcoin and also challenges with KYC, know your customer, and anti-money laundering. However, new technologies such as proof of stake that the likes of Solana and Avalanche are using actually have relatively low carbon emissions, are more energy efficient, and in our own work, we're embedding KYC into those anyway. So that's, I think these new approaches are going to take over going forwards from the likes of Bitcoin. So Apple is rumored to be launching its glass eye at the end of this year or early next year, especially as standalone 5G networks really scale. And during this change, as we get convergence between AI, augmented reality, mixed reality, mixed being in between VR and AR, it allows you to dynamically interact between a real world and a virtual world. We're going to get faster change than we have since the start of the Industrial Revolution, all within 5 to 7 years, which is going to completely alter your portfolios and how you do business. It's going to be in real-time engagement as you walk around, offers coming to you, personalization, and it's going to lead to new mega-cap companies. Both Morgan Stanley and Goldman Sachs analysts have said it's an $8 trillion opportunity. A Bloomberg analyst said $800 billion already by 2024. And whilst we always think of gaming and perhaps e-commerce, it will have other implications going right down to the fund management sector. Why is 5G important? Because you get to, especially standalone, because you get to very low latency. Latency is the time it takes from a transmission. Say, for example, you're using LinkedIn or whatever, and it goes and fetches the data from a remote cloud server. It reduces latency massively and massively increases the capacity. Often you see with 4G and even 3G, it drops, it's maxed out on capacity. There's a massive scaling in capacity which will allow, whether it's autonomous cars, autonomous robots, etc., and also AR and VR to work without latency. So these are going to be huge game changers and much more energy efficiency going forwards. It means that we're going to have an explosion in internet-connected devices. Statistics say by 2025, 75 billion. There are others like McKinsey say a trillion by 2030. But even if we go with 75 billion, think about that. That's an average of 9 per person on the planet of internet-connected devices. That's crazy. Think about the amount of data we're going to create. This from IDC Seagate shows, look at, even from 21, we're going to increase data more or less threefold. Threefold. And out of that, 30% of that in 2025 will be consumed in real time, which means that you'll need AI technology to manage that data. So this is from Iman Ghosh at Visual Capitalist, and it shows how from smartwatches, AR and VR goggles, smart homes, smart cities, smart industry is all going to impact how we live. How AI is going to be there on the edge. The edge means on the device. So it's not going to be in a remote cloud server. It's going to be on your mobile phone or on your smart glasses, all around us, internet connected in your home. You're going to be interacting with AI, smart sensors. It will impact the insurance sector because now you can start to predict risk before it actually happens and intervene. Fund management. You could be sitting on your sofa at home with the glasses and charting the markets. Rather than having the huge Bloomberg and Reuters screens, I used to have those. I used to have 6 screens around me when I was an asset manager at Morgan Stanley and trader. Now you can be sitting on your sofa at home, and there you go. And not only just watching it holographically, but interactively. AI agents will interact with you, and you can ask them questions, and they can go and fetch the data for you and have a dialogue with you and explain to you, this is what we believe is going on in the market. Entertainment. Here we have the lady who's now purchasing, she's a secret Justin Bieber fan, probably didn't want to let everyone know that, and there she is at home making a purchase. E-commerce, completely, maybe it's going to be called G-commerce, glasses commerce. Entertainment, music. In fact, Intel commissioned a report from Ovum. It said $1.3 trillion of revenue through 5G in the media sector alone by 2030. And again, 2022 to 2028, you can see that huge acceleration. The reason why standalone 5G was delayed in the US and UK and many other places was the politics with Huawei, and we ripped out that 5G infrastructure and had to put in Nokia and Ericsson. So that's why it's going to occur more likely at the end of this year and early next year. But that's when the magic really starts to happen. Autonomous cars. If we get to level 5 autonomous cars, say by 2030, Credit Suisse say that there'll be an 80% reduction in car ownership as a result, because people will do carpooling. In fact, if you look at the actual statistics in the UK, and the under 28s, there's a 40% reduction over a decade in those holding driving licenses. 40%. Now, when I was in my 20s, getting a driving license was one of the first things I wanted to do. In fact, as a teenager, when I was 17, 18, taking the driving test. Now, 40% reduction over a 10-year period. Uber, etc., having a car is not the same thing it used to be. Where does that leave the auto leasing market? The other thing is your property portfolios. With an autonomous car, if people are not owning them and it's going from journey to journey to journey, like an automated Uber, it won't need a stationary car park unless it needs a rest where it can go to the outside of the city. It's going to reshape our cities. Insurance market, insurers, if we can de-risk both homes and our roads, where does that leave us? Manufacturing, simulation with holograms, digital twins. The one on the left is actually from Siemens. It's actually in real-world production in their factory. You can model and simulate things and identify problems before they occur, or use it for design using AI, AR, or VR. The environment, that's what I work on. I was global head at Morgan Stanley, and scaling finance, debt and equity for infrastructure projects. AI can be a job creator. We talk of it as a job destroyer. But in the 2020s, as PwC showed on the left, you can create a huge amount of GDP and jobs for it, just in 4 sectors alone: energy, transport, and water by 2030. 38.2 million net jobs and a huge reduction in GHGs. 5G can drive reductions as well, according to the US EPA, but according to BCG, create 4.6 million jobs in the US alone, and a huge amount of GDP, trillions. You can look at, for example, ESG investment and see charts and interact with them and see the predictions. So this is a quick overview. Sorry, I didn't have a lot of time to go into it, but maybe we've got a video that we can go into. I don't know how we access the video. Perfect. So this is actually our Metaverse, my own one. So you can see there the chart showing the financial projections of the assets. This is a wind farm. You can see its projections, a wind and solar farm, before you actually invest in it, rather than a 2D image. And again, through financial charts, it's debt service cover ratios, it's IRR, it's cash flow after debt service, and predicted energy consumption. This is called an NFT, non-fungible token, but we're actually using it with a unique token to tokenize the debt and equity of these projects so they can actually become tradable, and it makes it a lot easier to create diversified portfolios, and you can use AI to optimize those for either alpha or index tracking. Property investment. Again, you can tokenize property investment. We put ESG standards onto it for energy efficiency and renewable energy, but you can actually start tokenizing that and do large-scale property investment, and again, create diversified tokens linked to and trade them effectively. So you'll see the NFT example there. So this shows you your token ID, it becomes unique, and it shows that you have that investment into there, and in the meantime, you get the yield percentage on the rental that comes through. So it's going to change everything: equity, debt, and indeed carbon, even carbon certificates, and it's going to really transform this asset management sector. We're going to go to a world of real-time interaction. So, for example, when you look at COVID crisis that came, if you were looking at financials historically, and you were looking at things like aviation and the hospitality sector in 2019 versus 2020, that wasn't a good predictor for those sectors in 2020. And likewise now, as things open up, it's no use looking back 1 year ago when they were shut down. So we're going to go to a world where you can do credit and time series forecasting of financials real time using AI models. And that also applies to energy prediction and weathers, et cetera, supply and demand. So it's going to transform all your analytics. It's going to transform real-world user experiences. So it's immersive and interactive, and you can actually explore that 3D space and interact real-time. So I do apologize, it was a very short session, so I couldn't go deep, but hopefully that gives you a quick overview. Thanks.
I have to say, that was incredibly, for a 15-minute presentation, not only to talk about sort of other world and real world, and then bring some real use cases, and then explore other topics at the heart and at the margin. Very impressive, very impressive. Now, let's move on. We're going to talk about quantum computing. This comes up more and more and more, particularly in the financial services world. And to guide us through it, this is all about quantum computing in investment management. Where are we currently? What are the benefits? So please join me in welcoming to the stage Mark Jackson. Now, he is, just to explain who he is a quantum evangelist. We'd expect nothing less. Previously, Cambridge Quantum Computing, now at an organisation called Continuum. Please join me in welcoming Mark Jackson. Mark, thank you. Over to you.
Thank you. Thank you. You can all hear me okay? Good. So So the organizers informed me that you're all experts on quantum computing, and we can just jump to the really technical stuff immediately, right? Okay, good. So how many of you have heard of quantum before? Good. Okay, so yes, as was mentioned, quantum is becoming more and more important. I have been working at what was formerly Cambridge Quantum and is now Quantinuum for almost 5 years, and in the beginning it was like pulling teeth to convince people that quantum was relevant to the real world. They were still very skeptical. But in the past few years, we've seen an absolute revolution in this. People are much more accepting. They've seen all the progress that's been happening. And so I'd like to spend the next few minutes kind of explaining what quantum is and how I think it will affect your world. So yes, I work at Cambridge Quantum. We actually started about 8 years ago, and we actually came out of Cambridge University, hence the name. Our founder was actually chairman of the Stephen Hawking Foundation, and Hawking personally told him, I think quantum computing is going to take off, and that was the origin of our company. And then just a few months ago, we merged with Honeywell Quantum Solutions, which did quantum hardware, to form this company called Quantinuum. And so we're the world's largest company doing just quantum computing in all of the areas. So first, I want to take a few minutes to explain what quantum is, because I've seen a lot of kind of misunderstandings. A lot of times people think that quantum is sort of a buzzword, which means really fast. Like we're just selling really fast computers, like the iPhone 8 compared to the iPhone 7, or something like that, like it's an incremental change. And I want to clear up this misunderstanding. So to explain what quantum is, remember that normal computers use bits at the most fundamental level, and bits are either 0 or 1 exclusively. And that's a bit like a coin on a table. It's either heads or tails. But quantum computing uses quantum bits, or qubits, we sometimes say. And a qubit is sort of like the coin spinning in space. It could happen to be heads or tails, but more likely it's somewhere in between. It's free to rotate in any direction. And so the reason that we do this is because it means you're sort of like considering both cases at once. It's sort of both heads and tails at the same time. This allows you to consider 2 options at once, rather than consider them sequentially. And if you had 2 qubits, you could consider 4 combinations at once. And if you had 3 qubits, you would consider 8 at once, and so forth. And so with just 30 qubits, you're considering more than 1 billion combinations simultaneously. And a quantum program is a way of solving some sort of mathematical problem, cleverly using these qubits so that the correct solution emerges and the others fade away. And so that's really what quantum computing is. This is a prime example of something that a quantum computer could do. So on the upper left-hand corner, this is my favorite molecule, caffeine. And it's not an especially large molecule. It only has about 24 atoms. But so we know what the equations are to simulate this molecule. We've known for 100 years. There's no mystery in that. But if you were to simulate this on a normal classical computer, we call it, you could do it, but it would take a very large computer. It would be almost the size of the Earth. And in contrast, if you keep going, a larger molecule, shown here, you could theoretically sort of model it, but it would require a computer the size of the universe. So that kind of hits upon even the theoretical limits of what you can do. Clearly, we're not going to be building computers this large. Now, in contrast, quantum computers could solve these equations with a very modest number of qubits, only a few hundred. And companies like ours and IBM's and Google's, they're talking about building quantum computers with millions of qubits. So that's why we're so excited about quantum computing. It's not just an incrementally faster technology, it's so much more powerful for some types of problems that we will be able to solve these things that we never could have even hoped to have solved before. So this is a chart showing some of the areas that quantum computing will affect. And it's pretty much every area of science and technology. And I would love to spend weeks talking to you about everything like this. I only have a few minutes, unfortunately, so I want to briefly address some of the things that I think are most relevant. So even though this sounds very science fiction-y, the amazing thing is we really have built quantum computers. They really exist in the real world. So these are 2 examples. On the left, this is one built by IBM, and you notice it kind of looks like a chandelier. And the quantum computer is actually just a chip at the very bottom of the chandelier. The rest of the structure is to keep it very cold. And most of the time you don't see the chandelier. It's lowered into a cryogenic chamber, like a very powerful refrigerator filled with liquid helium, kept near absolute 0. And another approach is that built by us. So this is one, it's a so-called ion trap technology. So we use lasers to trap charged particles called ions. So there's a lot of technologies that can be used to build these quantum computers, and I can't honestly tell you which one is the best approach. They all have their advantages and disadvantages, but the thing is we really do have these. These have existed for several years now. You have probably heard of Moore's Law, which has held amazingly true over the past several decades, that every 18 months or so, computing power doubles for the same price. Quantum computers are on a much faster trajectory. So the purple line shows the progress just made by IBM. So they've doubled the power every 12 months, and our group has increased it by a factor of 10 every year. So that's why we expect in maybe about 3 years, we will have commercial applications of quantum computing, because we would expect to have quantum computers about 1,000 times more powerful than what we have today. And so, when I talk about these types of things, it's not something that might affect you in 20 years. You will be seeing the effects of this in the next few years. This is very much a short-term thing. So why are we going to all the hassle of building all of these quantum computers? These are some of the applications. And I want to emphasize, quantum computers are not good at most things. You can't simply take your existing software and stick it on a quantum computer and expect it to be 1,000,000 times faster. Quantum computers are only good for very specific things, and we're still learning what those things are. So I mentioned the chemistry example, so that's certainly one, and this is of interest to pharmaceutical companies and to material science companies. There's a lot of machine learning applications, and that's what I'm going to talk about here in a minute. There's a lot of scheduling and logistics and supply chain type optimization problems. And then finally, there's cybersecurity. You might have seen a few headlines about quantum hacking and the threat of this, and that is true. So quantum computers, it turns out, are very good at hacking most types of security that we have now. And there is a very real threat that in a few years, quantum computers could be used to do that. It probably won't happen tomorrow, but in a few years, that is definitely a threat. So these are some of the things which I think are most relevant to you in the investment world. So a lot of times you have algorithmic trading. There's some mathematical equations which kind of predict the expected value of some price, and so you can make a decision on whether to buy or sell. And the uncertainty of markets is encapsulated in what we call Monte Carlo simulations. And there's what are called Black-Scholes equations that describe a lot of this. There's also things like arbitrage and portfolio optimization that you have to work through. Quantum computing is very good at all of these. And so there are already many financial groups, including JP Morgan Chase and Goldman Sachs, they already have very impressive teams just doing quantum computing. And many other financial institutions have hired companies like us to develop the software for them. So the financial world is already very much invested in this. To talk a little bit more about the Monte Carlo simulations. So as I said, Monte Carlo simulations encapsulate the randomness. And what happens is that it sort of gives there's a random element to it, and then it gives what might be the value of some sort of commodity. And then you run the simulation again, and it will give a slightly different answer. And so you run it again and again, and the answers tend to converge. And the more times you run it, the more accurate result that you could expect to get. So it turns out that quantum Monte Carlo, so they have already developed a quantum version of this, is much faster in converging. It's actually quadratically faster. So you get the same level of accuracy using 1,000 quantum simulations as you would for 1,000,000 normal simulations, because 1,000 squared is 1,000,000. And so that's why a lot of financial groups are especially interested in this type of technology, which already exists. There's already quantum software that can be used to do this type of work. Another application is what's called natural language processing. And you're probably familiar with this from things like Alexa or Siri. So natural language processing is how a computer understands what we as humans say in the normal world, and then the computer translates this into something that it can act upon. So it understands what you mean and how you use words to form sentences, and then it can act upon this. So it turned out a few years ago, a professor and his team at Oxford actually realized that there's a very natural way to frame this in terms of quantum computing. And so now there's this whole field of quantum natural language processing. And we recently made available a whole toolkit for free. So it's an open source toolkit for people to develop their own quantum natural language processing tools. And so very soon, expect to see things like quantum Alexa and quantum Siri, which have more accurate understanding of what we mean. So that is it for my remarks here, but I'm happy to answer any questions that you might have. Thank you very much. Thank you.
technical challenge with my speaker, but there we go. Yes, do we have any questions for Mark? Because just looking on the platform, we haven't had anything come through as yet, but I wonder if I could carry forward one question that came from another session, actually, mostly about cryptocurrencies and blockchain. Your thoughts around the sustainability of the production? And I'm sure this must come up quite a lot in your discussions about, is this going to become more efficient in that regard, or should we have any concerns?
Yeah, no, it is quite efficient. Yeah, there shouldn't be any concerns with that. Your comment about cryptocurrency and blockchain. So yeah, a common question I get asked is, could you use a quantum computer to mine all the Bitcoin or something like that? And the answer is no, you actually can't. And there was a research study on exactly this topic. So it turns out that the mining algorithm for Bitcoin is not something that a quantum computer is good at. However, as I mentioned with the hacking aspect, you could use a quantum computer to hack Bitcoin or blockchain if it had standard security. And so that's why we strongly encourage anyone to upgrade their security to what's called post-quantum encryption, so that won't happen.
Which was my next question, actually, about security. So there we are.
Yeah. No, fortunately, people have realized for a few years now that quantum computers will be a threat. And so they've already started to develop new encryption algorithms, which we don't think quantum computers could hack, but they're actually investigating it right now to test that for certain.
Wonderful, great. Well, listen, thank you so much, Mark, for all your insights.
Thank you all.
Please join me and thank you, Mark. Thank you very much indeed. Wonderful. Okay, love it. So I love the fact that in a really short period of time, we're kind of exploring what is current, what is on people's minds, and what is coming next. But what I'm really looking forward to is our next and final session, which is where we get to showcase the cohort of 2022. So I'm going to ask all our presenters, please, to come up to the side of the stage. This is our new post-COVID in-person cohort. They've already survived a very rigorous selection process. So we have 5 innovators, and for this cohort, we give them the luxury of an extra minute. Yes, indeed. So they get 3 minutes to pitch, do their power pitches, and tell you what on earth they do, why it should matter to you, and indeed a little sense of what you could expect next. We have 5 presenters, all coming to the side of the stage, if you could come forward. Thank you very much. So we have Gretel, Duncan Stevens, who's the co-founder and CEO, Core Labs, Sabina Del Prete, who's the founder and CEO, Naya One, Karen Jane, CEO, Sapphire Maxlam, head of EMEA, and Sesam M with Sylvain Forte, who is also CEO. So you see, you've got the very creme de la creme of their organizations. So I'm going to do this in turn. They're on it already. 3 minutes on the clock. The technical team are way ahead of me. So we're going to start in that order. I'm going to welcome to the stage Duncan from Gretel. Duncan, round of applause for Duncan. Thank you very much indeed. Come on up. Oh, you're like me. Look at that. Look at that. We're sort of matching. Would you like the lectern?
I might need to hold on to it, yeah.
I was going to say. And the clicker is there. And Duncan, you have 3 minutes on the clock, and your time starts now.
Hi there, everyone. I'm Duncan Stevens, CEO of Gretel. Now, you're probably wondering what problem Gretel solves. Well, across the financial services industry, there are about 20 million people who are disconnected from lost savings and investments. And whilst the temptation is to see this as very much a legacy problem, something of the past, the reality couldn't be further from the truth. The reality is the government forecasts that this problem is going to escalate to about 50 million lost accounts by the year 2050, if nothing is done to keep this in check. Now, against that backdrop, and whilst those numbers are staggering in their own right, the reality is there is £50 billion worth of wealth trapped in these inactive and dormant accounts. So there's a tantalizing opportunity there, particularly for your sector. Now, why has this become a problem? Well, 2 factors really. Firstly, whilst you're in a really regulated environment, anything from CAS to GDPR to the FCA's consumer duty coming in, the reality is the solutions that exist today are at best reactive and at worst ineffective. Against that, you have a lack of centralization, not just in your part of the sector, but across the entire financial service industry. And that lack of centralization, that lack of digitization holds back progress, and it stops customers and retail clients from reconnecting themselves. So it's unsurprising then when we questioned the public about this, about 63% of them said they simply didn't know how or where to reconnect. They thought the process was too time-consuming. There were literally hundreds of companies to deal with, or they'd lost paperwork or passwords that would stop them from doing so directly. So where does Gretel come into that? Well, Gretel's an award-winning platform for customer reconnection. It completely digitizes the process. It centralizes and simplifies the process of customer reconnection in one place, not just for your sector, but for the entire financial services industry. And what it does, by that digitization and centralization, it transforms customer reconnection from a process which takes an individual client of yours and a firm, sometimes weeks, if not months to do, into a simple 3-minute digital journey. And in doing so, it helps you not only reconnect with customers you've already lost touch with, but it then keeps you in contact with them. So it goes from being a reactive process to very much a proactive management tool to keep you connected and stop the problem from reoccurring. By doing that, though, we're able to help you dramatically reduce your engagement costs, reduce your tracing costs, and really fundamentally for us, in the context of everything we've been talking about, in terms of financial engagement, financial wellness, and obviously the great wealth transfer, the ability to have more holistic, more early stage conversations with your retail clients about their portfolios. And as if that wasn't enough, I'm really proud to announce that very recently we've just signed a long-term agreement with the Investment Association themselves, by which we are going to be powering your very own unclaimed assets portal in line with the dormant asset scheme that's coming your way.
I have to stop you there. That's your 3 minutes. Duncan, thank you very much indeed. Thank you for Gretel. Thank you, Duncan. Great, wonderful.
Sorry.
Thank you.
There you go.
Good, excellent. Well, our next presenter, it gives me great pleasure to welcome to the stage Sabrina Del Prete, who's the founder and the CEO of Core Labs. Sabrina, welcome. A round of applause, please, I think. Absolutely, absolutely. And there is 3 minutes on the clock, and your time starts now.
I'll do my best. I know you are an audience of financial services specialists, so I know that for a fact that you know the financial institutions have very large and diverse portfolios of financial products and financial services, and that these are complex, they're highly regulated, and very often they have long life cycles. What not everybody knows is that during the life cycle, up to 30 departments will collaborate. They will create thousands of records, of documents, of decisions, of data, and these all have something in common. So they come in very inconsistent format. They handle two very manual processes. They're kept in siloed systems. They are always collecting some kind of spreadsheet. They're difficult to locate, they're difficult to access, they're also difficult to interrogate. So they don't make it easier for us to evidence product governance, compliance, and consumer duty. And I know that for some of you, this is very familiar. Still, the regulator expects us to be 100% clear about what we have under the bonnet. They're closing in, they're dialing up in terms of personal liability for product managers and for senior managers. And of course, we got competition. All the new digital entrants. As long as we are slow and we are inefficient, we are an easy prey. So I'm Sabrina Del Prete. I'm the CEO, founder of Core. Before Core, I was 25 years in wealth management and in banking. That means I stood in your shoes, I felt the pressure, I got frustrated, and I set up Core. Core is a turnkey solution for digital product management, for digital product governance, and of course for collaboration for all the 30 that need to work together, sometimes over a 20-year period. We are a SaaS solution, so software as a service. We have a set of specialized tools that are specifically designed to help in the creation, in the managing, in the monitoring of financial products. What's crucial is that we create a digital corporate history for each one of those products, which means that you can retrieve your audit trail, which is precise and granular, and you can do that at the touch of a button. We also have hundreds of controls to nudge people towards the right process to ensure governance.
5 seconds left on the clock.
After the era of CRM and client lifecycle management...
I have to stop you, Sabrina. Sorry,
so let me finish this. I just have to say that we invented the PRM, Product Relationship Management System, and PLM, Product Lifecycle.
I do now have to stop you because we are now 11 seconds over. Sabrina, thank you very much indeed. Thank you. Very good. Excellent. So next up, I'm delighted to welcome to the stage the CEO of Naya One, Karan Jain. A round of applause, please, if you would. Thank you very much indeed. Thank you. So again, your 3 minutes is on the clock and your time starts now.
Afternoon, everybody. Karan Jain from Naya One. We're a platform that gives you access to hundreds and hundreds of fintechs and data sets. We do that using our digital sandbox as well as our FinTech as a service. It's been a rich morning of insights and trends, and we've heard a lot about how the margins are eroding, the regulations aren't going away, they're only getting more complicated as they intertwine, more are coming in, customer behavior is changing. That was all fueled by the pandemic. Now, what we've got to look forward to is more changing behavior in the market with embedded finance, and we heard earlier about Web3 and the crypto. So when we talk about innovation, we talk a lot about fintech, but where do we find these fintech and how do we connect to these fintechs? So imagine if you could connect to one platform and access to all those different verticals through that. So let me take you through an example. So currently we're working with a number of clients where we're helping them with their ESG, ES&G propositions, and basically we have a value chain that goes through various verticals. You have a number of fintechs in there, and a client is able to come in there and test up to 20 to 30 different fintechs all through one platform. The impact of doing so, I don't know if you know this, but for an enterprise to work with the fintech, it can take up to 9 to 12 months by the time you go through the onboarding and the procurement, and it can cost upwards of 100 to 200,000 pounds of internal costs. This is before you pay the fintech. So the impact is we save that, we bring that down to weeks and days, and save you about 80% of that cost. So that's what we do. It was good to hear some of our customers earlier. We heard a lot about the digital sandbox. So we're also the infrastructure provider for the UK digital sandbox that we heard quite a bit about earlier today. So I'll leave it at there. I've got 55 minutes to spare.
55 minutes, 55 seconds.
55 seconds.
If you want to keep going, I suspect that they want to have lunch before 55 minutes is up. but listen, very generous of you to use the time, but very good. Any final remarks while you still have time?
We're single point, where you access us through SaaS. Any technologies that we don't have on the platform, we can onboard for you. It does save you a good 9 months of onboarding technologies and testing them.
Wonderful.
Thank you.
Karan Jain from Naya One. Thank you very much indeed. Thank you. From Naya One. Wonderful. Great stuff. Excellent. So next up, it gives me great pleasure to welcome to the stage. He's the head of EMEA from a company called Sapphire. It's Max Lamb. I was going to say, you're Max, aren't you? I didn't think, unless you'd like to switch your pitches. That would be fun. We should do that next year, switch the pitch. There's a whole session, I tell you. Excellent. Max, welcome. The 3 minutes on the clock, so as soon as your slides are ready, ready to go, let's begin.
Lovely. I have 3 things I want to tell you in 3 minutes today. I'll try my best because I'm scared of the clock now. What we do, the unique value we add, and also, the unique value that we add. But first, before we start, 3 things, 3 extra things. Large brokers, custodians, and investment managers that already use the platform. We have JPM, we have Bank of New York, we have BlackRock, and many others, but it's not an exclusive club. We are looking for more asset managers, more brokers, more custodians to join the platform. Lots of firms claim that they're different, but I think we are valid in saying that because we have 104 patents covering what we do. And those patents are about how we remember the relationship between data and documents and how we bring it all together into a way that's useful for market institutions. There are other bits of kit that you can buy that deal with onboarding, but we don't think any of them actually deal end-to-end with things that we deal with. So what does Sapphire do? Well, if you have a look at the chart that's on the screen in the bottom left, we have 4 red circles, and they represent things like pension funds, asset owners, investment managers, custodians, and brokers. And between them, lots of red dotted lines. And those red dotted lines are the way that things are done now in terms of setting up accounts and managing accounts. Emails, PDFs, spreadsheets, phone calls. It's very repetitive, it's very slow, there's lots of keying involved, it's error prone, it's inefficient. And of course, it gives you no golden source of data at the end. On the right, we show Sapphire as a hub, and we are cloud-based, Microsoft Azure-based, and we let you share documents and workflows between and within institutions. And as a result, also give you a golden source of data that you can refer back to and hang your further processes and systems onto the bottom of. We deal with AML, KYC, ISDAs, custody account opening, broker account opening, LEIs, NAVs, AutoFX setup. There's one large asset manager we set up, 360T for automatically, and many more things than that. But we're not just about setup. We also have things like a ready-to-trade tool. And the ready-to-trade tool gives the dealing desk a traffic light, red, orange, or green, to say you're good to trade on this instrument. And that comes from having the underlying data right, that we are able to do that. So you can access that as well through Teams or Symphony or our web platform or API integrator. So in terms of benefits, in my last 20 seconds, 50% reduction in email traffic to 75%, depending on whether you're buy or sell side, related to what we're doing. A 35% reduction in post-trade queries, and along with that, quicker pipeline into revenue.
And the talk has just run out on you. Excellent. Sapphire, thank you very much indeed. Thank you.
Thank you.
Sorry, let me give this back. Thank you. Thank you very much indeed. So last but not least, thank you for your patience. Come on up. I need your enthusiasm earlier, but come on up. It gives me great pleasure to welcome to the stage the CEO of Sesam, Sylvain Forte.
Thank you very much. As you can see, I was very impatient to present you what we do at Sesam. So I'm Sylvain Forte, I'm CEO and co-founder of Sesam. We're a fintech company specializing in artificial intelligence for investment managers and corporates. And what we do is we basically extract billions of articles and messages from the web and transform them into valuable insights, especially ESG insights on small and large companies, sentiment insights, risk insights, everything that you can gather from the web and transform into valuable investment data. We do that by gathering information from more than 4 million different websites, and we have one of the largest data lake in the world, more than 17 billion articles and messages, including data from news websites, social media, NGOs, anything that you can use in order to automatically track information on companies and other assets on the web. So what do we do more precisely, and how do we do it? Based on this information, we can extract various kinds of insights. I'll give you two short examples. Say you're an asset manager or a bank, and you wish to extract ESG information on your own clients, or on small private companies that no one will cover in the industry. With our platform, you can cover more than 5 million different companies with a daily frequency of data, which is amazing considering that most ratings tend to be generated on a quarterly or annual basis. With our platform, you can get that daily. Another quick example, and something that sadly we get a lot these days, is analyzing how your portfolio companies or your own clients or suppliers may be exposed to the war in Ukraine, and tracking for mentions related to natural gas, tracking for mentions related to Russia specifically, and we can do that using natural language processing automatically across the entire web. Better than that, we can even track the Russian propaganda directly, as we have access to websites such as Russia Today, for example, or Sputnik. That gives you really a view of the entire web. So to give you a bit of insight as to who we are as a company too, we're a firm of 90 people now, growing very quickly and with offices in different countries, in London here, but also in Paris, in New York and in Tokyo, for example. And we're a multi-million AR revenue company that is really succeeding right now in that AI space for investment. Our real objective and our ambition is to make the web fully searchable and a source of valuable analytics for all investment professionals and corporates. In the last remaining seconds, I'll just leave you with two calls to actions. First, please come to our booth. We're just there, and our team will be happy to talk to you. And if you're an asset manager or a bank, feel free to request a free proof of concept for us, and we'll be very happy to discuss the type of information that you could extract from our platform. Thank you very much.
Wonderful. Great. Thank you very much indeed. Thank you. There we go. Perfect. And 10 seconds left on the clock. Wonderful. Thank you, Sylvain. Perfect, great. Well, they were wonderful pictures. If we could just ask all the presenters to please remain at the side because we do want to get a photo. We're going to get a photo opportunity shortly. But I just wanted to remind you of the brands. Don't forget they are around the room as well. So you can then catch up with Gretel, Core Labs, Naya One, Sapphire, and Sesam. So I think we should just give them all a huge round of applause for their pictures. Thank you very much indeed. Very good. Very, very good. Very good. So, goodness me, what a morning it has been. I'm going to invite Gillian. Come on, Gillian, come on up. Let's wrap up this, because I'm sure people are ready for some lunch. I'm sure they are. But I just wanted to just do a couple of things with me, and then I'm going to hand straight over to Gillian to close out the day. First of all, do please fill out the online feedback forms. We really, really want to hear what you think about this session and the various component parts of it as well. That's all available via Glitter, no doubt. And also, please do contact us on Glitter if you have any questions or any direct feedback. Very, very welcome. On the 14th and 15th of September, there is the Global Investment Summit here at the Guildhall. Put the dates in your diary, the 14th, 15th of September. And I just want to say final huge congratulations to all 5 FinTechs who made it through the selection process and are all part of the Engine program as well. But now, who else should I bring on stage, really? So Gillian, close it out and see us on our way.
Well, thank you. This is the last time you're going to see me today, I promise. But thank you so much. It's been a fabulous morning, and we've had the pleasure to hear from our outgoing and incoming engine innovators. We've heard fascinating insights on the intergenerational shift, the developments in quantum computing, the use of cryptocurrency, the opportunities within AI and the Metaverse, SRI data, and just so much more. But as Julia briefly mentioned, if you wouldn't mind doing the feedback form, that would be fantastic. And also, if you wouldn't mind completing our final polling question, which will come up on the screens shortly. It's been an excellent morning, but all of this would not have been possible if it wasn't for our fantastic speakers, our outstanding events team, and of course, our phenomenal compere, Julia Street. Thank you. Julia, you've helped us traverse what has been a hugely fast-paced, jam-packed event with absolute ease. And thank you again to the City of London Corporation for this fabulous venue, and to everyone who has joined us here today, both physically and virtually. We very much look forward to continuing the FinTech focus next week with UK FinTech Week, where I am sure I'll see many of you again. But now it is time for a bite to eat, a glass of wine, and a chat to talk with each other. So that's it. It's a wrap. Thank you, and I look forward to seeing you again soon. Thank you. So the last question, sorry, before we go, one last thing. What topics would you like to see covered in an upcoming tech talk? So we do those on a regular basis, looking at all aspects of innovation within investment management. So if you wouldn't mind completing that, it'd be really grateful. Thank you.
Thank you all very much. Very good.
She's not unheard of. To us. Yeah, you've got to put that through as well, so.